This is All India Radio. In the program Money Talk, now we bring a discussion on resilience of Indian economy amidst global financial issues. The participants are Aidyanathan Iyer, Economic Analyst, and Anubha Rohatgi, Iyer Correspondent.
A World Bank report recently said that India's growth continues to be resilient despite some signs of moderation in growth and amid global slowdown. To discuss more about the resilience of the Indian economy, we have with us Economic Analyst Aidyanathan Iyer. Mr. Iyer, welcome to the program.
Thank you so much.
Mr. Iyer, at a time when the International Monetary Fund IMF has projected a slowdown in global growth over the next 5 years, how significant is the World Bank's recent statement that India's growth continues to show resilience to external shocks?
It is very interesting. It is very significant in the sense that, while, we are talking globally about a slowdown, and even the US, there are talks about a recession later in the year. Interestingly, India seems to be well poised to kind of weather the shocks that are we can see from on the external sector right now because of a couple of things. One, of course, that, we are moving ahead with our fiscal consolidation. It is projected at less than 6% for the current financial year. Our forex reserves are pretty good. And also, I think the government's investment program during the year seems to be pretty strong on the capital expenditure front.
Mr. Iyer, what are the global factors that are most impacting or are likely to impact India's growth at this moment?
Yeah, so one of the biggest factors is, we are not really sure what is happening in the US in terms of whether it is going to hit a recessionary wall immediately or sometime later in the future. But it is very clear that the US Federal Reserve is continuously tightening its monetary policy stance, and it continues to increase interest rates. Why the US is doing that? Because US is doing that because it is facing an unprecedented situation where the jobs market in the US is extremely buoyant. It is fiery red hot, but it is also simultaneously trying to grapple with the high inflation levels in the US. So in that situation, it is trying to bring down the growth rate to calm down inflation. It wants to bring down inflation to 2% levels, whereas in India we have a target of 4% annual target with a plus minus 2% band which RBI operates in. But US, when it tries hard to bring its interest rates down, it has a huge impact, and that it does by one of the major tools to do that is to hike interest rates. And when it does that, it has a huge impact on growth prospects. When the US slows down, it has an impact on the rest of the world because US is the largest economy, and Europe is also facing a very similar situation where it is also increasing interest rates to battle an unprecedented high inflationary situation in the Europe. So across the sides, both sides of the Atlantic, US as well as Europe, interest rates are being hiked to fight or ward off inflation. In that circumstance, we are seeing that a global slowdown looks inevitable. So it is a matter of time whether it happens 3 months down the line, 6 months down the line, or later in 2014. But we are looking at a situation where the rest of the world is going to slow down, and when the rest of the world slows down, it has a huge impact. It has an impact on India because, India, our exports get, hit because of a global slowdown. And private investments from US, FDI, etc., from the rest of the world, it kind of slows down. So that is the situation that we are in. Although we are looking at a growth rate of 6.5% this year, that is 2023-24, but we might be impacted by the global slowdown.
Despite all the facts, despite the fact that US is looking at a recessionary trend, India is still one of the fastest growing economies in the world. But the World Bank has moderately lowered India's GDP growth forecast to 6.3% from 2023-24 from the earlier projection of 6.6%. What are the likely challenges for the Indian economy that it needs to overcome to maintain this pace of growth?
See, broadly, in a situation where, there is nervousness in the financial markets in the rest of the world, particularly the US, with the global, banking crisis, there are, 3 banks actually, shutting down. And in the Europe, we saw a merger of the Credit Suisse Bank with UBS. In such a situation where there is some kind of, say, nervousness or anxiety in the financial markets in Europe as well as in the US, it is very likely that, investment flows or credit flows to emerging markets like India slow down. If sources of funding from overseas to India kind of gets impacted, then whether the corporate sector has enough capital to invest to meet the demands of a growing economy. That is the challenge. For India, well, that remains a challenge. Raising capital remains a challenge, and private sector investment, there is a general sense of wariness even among the private sector because, of what is happening in the rest of the world. And in times like this, what's best for India, for a country like India to do, is to ensure that its macroeconomic fundamentals are good. So it is best to ensure that, we stay the course on fiscal consolidation. We do not the government doesn't go overboard with its expenditure or wasteful expenditure, I would say. So it keeps a strong control over its fiscal deficit. It ensures that it is below the target or around the target that it has set for itself, which is 5.9% of the GDP for the current financial year. That is number one. Of course, number two is to ensure that, the government continues to spend, and in productive expenditure, there is no kind of reduction in productive expenditure or the demands of the economy in terms of, say, at a time when particularly the private sector is not very keen or not very enthused about investments, the government should go ahead with its projected capital expenditure plan. And even if it exceeds its expenditure on the capital expenditure front, it doesn't really make too much of a difference because it would help growth. So growth brings a lot of positive aspects to it in terms of, employment, in terms of, incomes of people. So I think that in itself becomes an antidote for some of the other issues when we talk about in India.
You spoke about the crisis in the global banking system. When it comes to India, however, the health of the Indian banking system has improved significantly in the last few years, and the NPA have also come down. So how will the banking and the finance system support India's growth story?
See, that is the worry now. When, say, if you look at the recent monetary policy review that happened earlier this month, the RBI did effect a pause on repo rate hikes. It did not hike repo rates, although there was a consensus that, RBI will go ahead and increase the repo rate by 25 basis points. So if you remember, there have been 6 consecutive increases in repo rate since May of last year, and this would have meant, almost an increase of 250 basis points in the key policy rate, and which has translated down to higher EMIs for, people like you and me, and higher interest rates for, corporate sector or private companies which want to invest. So in circumstances like this, private sector, when there is a global slowdown, when interest rates are high, it is likely that the private sector investments may not be so buoyant as many would expect. So it is very natural that the private sector investments may not be up to the mark or may not be in a scale that we can, exceed the growth targets of 6.3, 6.5%. Because RBI expects 6.5% for the current financial year. So exceeding that kind of growth rates with an external environment like this is a problem. So, but our bank, as rightly pointed out, over the last, say, 10 years or so, our banks have kind of improved in terms of their own capital requirements, in terms of bringing down their, non-performing assets or bad loans. So they are adequately capitalized. They are kind of placed in a position where they can meet the capital or productive needs of the private sector in terms of lending. But whether the private sector comes and borrows is a question today. It is not so much about the bank's ability to lend.
You pointed out that the Reserve Bank of India last week decided to keep the repo rate steady, maintaining it at 6.5%, even though inflation does remain elevated. So is this a cause of worry? Can elevated inflation present obstacles in India's growth story?
See, inflation for the year, if you look at what RBI has projected, it has projected inflation at about 5.4% by the end of the current financial year. So, it is, but, inflation is always a worry. It is not so much a worry for, say, the upper middle class. It is a huge issue for people who are poor because, it is like a tax on the poor because, inflation of 5% essentially means that the prices are higher by 5% for the poor person. It is an indirect tax that he pays on everything that he purchases from the markets. It could be soap, could be, footwear, could be anything. So inflation, it is very critical to ensure that the inflation doesn't cross the 4% plus 2% upper tolerance level which the RBI has set, because beyond that, if inflation is not maintained, then it hurts growth in many, many different ways. It hurts growth, not just growth, it also hurts the common man and his, capacity to spend or his income levels, it actually comes down notionally. So I think that is a big challenge for the RBI because the RBI suddenly indicating after going the whole hog of, hiking interest rates and still saying that this is not a pivot point. Pivot point essentially it is saying that, it is not that we have stopped hiking interest rates. It is possible that we might hike interest rates, or it is also possible that at some point of time they might reduce interest rates. So it gives a kind of a confusing signal. It also points to the kind of contestation of ideas between the Finance Ministry and the Reserve Bank of India, which has been in India forever. While the Finance Ministry or the government would always want higher growth rates, RBI would want to control or keep a tight leash on inflation. So this is where the challenge for the RBI is that, while you support the growth aspirations of the political class, it is also important that you ensure that inflation is reined in so that it doesn't hurt growth itself in the coming, in the medium term. So
yes,
this signal was a bit confusing by the RBI because one would assume that, you might as well go the whole hog if you're not pivoting. So, but it says that, we are not. This is not a pivot, but still I am pausing. So that is a slightly confusing signal that the RBI gave in this policy.
Mr. Iyer, as you know, the Finance Minister Nirmala Sitharaman is in the United States on an official visit at the moment. And there, during an event, when she spoke about India's resilience, she said that Indian economy's resilience is due to the resilience and enterprising nature of Indians. She said that India took up COVID-19 as challenge and extended support to people through targeted approach. Your take on the Finance Minister's comments very briefly.
Yeah, I think, it is true that, India didn't really go for this, massive fiscal expansion of giving away, huge cash doles as many wanted India to do during the COVID period when there was a harsh lockdown in March, April of 2020. And then subsequently, it was a prolonged COVID for India, just like for the rest of the world. And, it did push out many people to the brink of poverty. The poor were, the bigger sufferers. But then one great thing which India did at that point of time was to ensure that food went to all homes. Because at the end of the day, it is very critical that people do not starve for food. So that credit one has to give to the government that it ensured that food was available. Second was, of course, this massive challenge of, ensuring that every Indian gets the COVID vaccine. So that in itself, for a country like India, which is developing economy, with a huge population of 140 crore people, I think ensuring that everybody gets vaccinated was a huge challenge which India surmounted. And I think there have been commentaries by, many economies last 1 year, like, Ruchir Sharma, who actually pointed out that this kind of not going overboard with, spending during the COVID years has kept India in good stead.
Mr. Iyer, thank you so much for speaking with us.
Thank you so much.
You were listening to a discussion on resilience of Indian economy amidst global financial issues. The participants were Aidyanathan Iyer, Economic Analyst, and Anubha Rohatgi, Iyer Correspondent. This program was produced and presented by the News Services Division of All India Radio. You can listen to it on a mobile app, News on Iyer. This program is also available on a YouTube channel, News on Iyer Official. You may share your feedback about this program through email at airnsdtalks@gmail.com or WhatsApp on 9289094044.